Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish engulfing pattern a bullish opening along White Mariposa yesterday after the previous session's indecisive spinning top, with a base for a third session on the combination of the dark blue July 2017 to November 2018 head and shoulders neckline, currently at 109.41, along with a close by 50% Fibonacci line of the January 21 to September 22 move at 109.44. The market took off upwards, up through the purple neckline extension to the January and February 2021 reverse head and shoulders pattern, currently at 109.98, up through the bright green July 2008 to date downtrend, currently at 111.28, which I capped the market last week, up through the congestion at 111.39, made up from the March 20 and December 23 highs, and most crucially, up through the September 2024 high at 112.13, and I will speak more on this shortly. Finally, up through just the pink May 2011 to date downtrend, currently 112.36, though we did not manage to close over it. Now, this action higher brings to pass a possible annual key reversal pattern here. We are already only 4 months into 2025, set up for an annual key reversal here. Thus, if we close on Wednesday, and this is how far ahead it is, Wednesday the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between and would have a lesser outside year pattern. I am at this stage not even going to point out what we could be looking at here, as it is too early. But it is right that I point out that we are set up for one now, even at such an early stage. Now, one final feature, much closer to today. I had earlier pointed out that we were set up for the whole of March to date action as a bullish halfway hesitation for potential target X in the 112.75 area. This target was achieved today. Now, so far today, a further move higher, up through the pink downtrend again and the July 23 high at 112.76 into a fairly free area before the June 2020 high at 114.22 and the congestion at 114.82 to 114.95, made up from the January and February 2022 highs respectively. We also have the bright red neckline extension at 114.70 to the August to September 2020 head and shoulders top, though I don't know how good this resistance might be, but so far today it's worked out pretty well by the looks of it, as it's battered it down from there. It is a pretty impressive high. Cable, aka sterling against the US dollar. A third bullish white soldier yesterday after the recent bullish Harami and bullish opening White Mariposa. Prices utilized the gold long moving average, currently 128.14, below as a base for the move higher. And they pushed up through the November 2020 low at 128.52, as well as most of the congestion overhead between approximately 128.15 to 130.14, closing still right within it. Okay, so I recently asked you to keep a continuing eye overhead at the September 2024 high at 134.34. I would still ask you to keep an eye overhead, as you see if prices exceed that level, then we would have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. Now, this has already happened in Euro-dollar on the same period. However, we have a number of significant resistances here ahead of that, some of which I've already mentioned. But I'd like to add today the December 2020 low at 131.33, the July 23 high at 131.44, the purple neckline currently at 132.46 of the small November to early December 2024 reverse head and shoulders continuation pattern. Now, this one capped the market last week. The Fibonacci and March base congestion area between 132.46 to 132.98. That includes just outside it the bright red 2021 to date downtrend, currently at 133.02, before we reach the September 2024 high. Now, there has been a question raised as to whether the whole March day action is perhaps a bullish halfway hesitation. Now, this question is open, and right now I've had my doubts about it, because if it did happen, it would be a very sloppy one, but it is still a question out there. Now, so far today, A continuation higher, pushing up through the congestion between approximately 128.15 to 130.14 and testing and piercing the next resistance at 130.47 with a move up to the combined congestion of December 2020 low at 131.33 and the July 23 high at 131.44. US dollar against the Japanese yen. A reactionary bearish long black Marubozu yesterday after the previous session's combined outside day bullish piercing line pattern and a bullish double pattern. Prices dropped back down below the lesser Fibonacci line at 146.69 and below the significant 50% Fibonacci line of the January 23 to July 24 move at 144.58, closing just below it. Further down we have the broken pink upper trend line currently at 143.23 of the well highlighted early February to late March descending wedge pattern. Below this we have a small clear zone down to the August 24 low at 141.66. Overall the market remains within the larger big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork, with the bright red upper time above currently at 150.14 and the middle time below currently at 134.85. This pitchfork shows the bearish angle of attack of this market. Now so far today, a test up to the overhead 50% Fibonacci line at 144.58, but an immediate rejection, and we've just pushed below the pink upper trend line of the descending wedge pattern. The lowest have been since October last year. We're now in a fairly free zone now until the August 2024 low at 141.66 and the broken, well, the pink lower trend line I should say, currently at 141.60. US dollar against the CNH, the offshore Chinese yuan. A second bearish black crow yesterday and a follow-on to the previous session's bearish engulfing pattern and 2-day pipe top pattern. Now prices tried a reaction move higher over the congestion between 734.41 to 734.96 and up as high as the September 23 high at 736.81 and almost as high as the October 22 high at 737.49. But this combined congestion, though not effective earlier this week, managed to erode the bullish incentive and prices turned lower, back down through the congestion between 734.41 to 734.96, pushing and closing just below the July 2024 high at 731.13, though not as far as the bright green lower time currently at 729.09 and the nearby mauve medium moving average currently 728.68. Now I'll discuss this bright green lower time now. So I recently drew a pair of pitchforks for the same move. Now something I do not usually like doing, as I prefer one or the other. Nevertheless, prices are now just above the bright green lower time below, currently at 729.09, and in between the overhead purple middle time, currently at 739.13, and lower time below, currently 726.05. Both of these pitchfork patterns are for the same action, the late September 24 to mid-March 25 move. Both have been penetrated, but right now I still favor the bright green bullish Andrews pitchfork to show the bullish angle of attack. Now so far today, a dip down to that bright green lower time and mauve medium moving average, but a reactionary move back up through the July 24 high and towards the overhead congestion area between 734.41 to 734.96, though we've moved back down to roughly unchanged with yesterday's close. US dollar against the Brazilian real. An immediate countering bullish harami and bullish opening white Marubozu, along with a possible inverted hammer pattern yesterday after the previous session's combined key reversal down and bearish closing long black Marubozu. Prices rose up through the March 21 high at 588.04, the flatlining mauve medium moving average currently 591.03, and peaked at the recent 50% Fibonacci line at 595.21 of the December 24 to very early April 2025 move, before dropping back down to close just over the March 2021 high. Overall, I had previously drawn a pair of bullish patterns here for the same action, the mid-August 24 to very early April 25 move, something I do not like doing. You see, I am an either-or type person in this regard, but I'm not sure which works better just yet. So we have a dark blue bullish Andrews pitchfork with prices in between the overhead middle time, currently at 615.54, and the lower time below, currently at 561.69, and a bright red bullish shift pitchfork with prices in between the overhead middle time, currently 601.39, and the lower time below currently at 5:59.99. There's also one key outstanding feature that is still in development. We are set up now for a possible monthly key reversal here. Thus, if we close on Wednesday the 30th of April either over 588.52 or under 584.10, then we'll be on. Anything in between will have a lesser outside month pattern. US dollar against the Mexican peso. An immediate countering bullish army just and bullish opening white Mariposa yesterday after the previous session's combined key reversal down and bearish engulfing pattern. Prices from the open pushed higher over the combination of supposedly significant congestion made up from the combination of the flatlining green short medium moving average currently at 20.35.47, the flatlining mauve medium moving average currently 20.37.38, and the old bright red lower bull channel line currently at 20.40.24, with a very gently rising early November 24 to early March 25 a broken lower bull channel. However, the top side was capped by the significant September 22 high at 20.57.65, and that's the center of a congestion area stretching roughly between 20.17.20 up to around 20.83 even area. And we ended up closing just over the moving average and broken lower bull channel congestion below. Now further up we have the 50% Fibonacci line, the April 20 to April 24 move at 20.99.90, and the bright red upper bull channel line currently at 21.12.14, plus the July 22 high at 20.05.01. Meanwhile below we have the April 22 high at 20.17.20, and further down the significant congestion zone between 19.87.96 to 19.91.31, reinforced from below by the rising gold long moving average currently at 19.88.25. All this has set up the conditions for April to possibly become a monthly key reversal. Thus, if we close on Wednesday the 30th of April either over 20.53.10 or under 20.45.80, then we'll be on. Anything in between would have a lesser outside month pattern. Right now we're looking at an outside month pattern, but it is still very, very early as yet. Now so far today, it's a basing action on the broken red lower bull channel line and a piercing of the September 2020 high. But it seems the market is finding it a little tougher today compared to earlier days to go through that congestion stretching from roughly between 20.17.20 up to around the 20.83 even area.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.